Okay, good morning, everybody. Today is the 14th of July, 2023. I will be your host. This is your weekly take on the market. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I can't make buy, sell, hold ideas, recommendations. Our circle of competence at IBD is research and education. It is, on another note, it's almost 9 o'clock Pacific time. The market's open. This is the only time I could do the videos. It was now or never. So I thought I would throw out some thoughts, barring an epic collapse of the market in the last few hours. I don't see how my analysis would change much. So I thought this was as good a time as any. I have something going on this afternoon. Okay, so we'll do market thoughts and we'll do industry groups and some stocks. Excuse me. Bear market rallies. This was posted by Fidelity. And if this is a bear market rally, we are at the record highs. So a 64% retracement. And you can see like in 2022, 55% retracement, and 48, 60%. So these are like some of the extreme ones. And so this would be a record if this turned out to be a bear market rally. I think it's semantics. I don't know if it's a bear market rally or not. I'll know afterwards. If you force me to say, I would say no. I'd say the action in the stocks has been really good. There's been stuff to buy. We're within stone's throw of new highs. I think that if the Nasdaq moved up another 8% or so, it'd be a new high, something like that. We're not that far away, maybe 10%. So it just seems like a bull market cycle. How long it lasts, we'll never know for sure. But we'll try to enjoy it while it lasts. One thing about traders, I think, at least for me, and I think I've mentioned this before, is that, when things are good, we're always afraid that it's going to end. And when things are bad, we're always afraid it's going to continue forever. So, and there's cycles to this. So enjoy it while it lasts. It will end. And if it gets bad sometime down the road, don't worry, that will end too. Just like when we thought that bear market from last year would never end. Here we are with the NVIDIAs of the world and Facebook's Metas, all up 100, 200% off their lows. So it comes and goes. Try not to get too high. Try not to get too low. I think that's the best way to handle this emotionally. So let's pull up the indexes. I've paused my screen, and a reminder to myself, because I was 90% through the video previously and forgot to resume the share. So I don't want to make that mistake again. Okay, resume share. So here's the NASDAQ. And I was a little bit worried, for lack of a better term, that, you had a bit of divergence. NASDAQ didn't make a new high while the S&P did. Right there. But it's very short term, and the market is blowing the doors off of that. So the NASDAQ is super strong. It's extended. Look, we're 20% above the 200-day. We're 8% above the 50-day. I just don't see this as being a good spot to be putting on more risk. It depends on the type of trader you are. I am taking it off. That's just because that's what I do. I like to take it off when the going is good, knowing that, it might continue. So, hey, I might take some off there and be wrong, might take some off there and be wrong. But then I avoid this little thing both mentally, and allows me to put some back on at better spots. Not that the price is cheaper per se, but that the risk reward is better skewed. You've had some type of shakeout in the names, like NVIDIA and SMCI, and I'll go through that. Let's just, like with SMCI, like if I take some off here and I take some off here, I didn't. I'm just saying I missed this upside, but I avoid this, and then it allows me to be aggressive somewhere down here and start to get positioned. And so, like, I didn't do that with SMCI, but I did buy it here. Now I don't own it any longer, but that's how I prefer. I want some type of shakeout. So like NVIDIA, you know, I'm selling some here and I'm selling some there, and it might not seem like a lot, but you know, that's 22 points, down 6% that day. Then it's down another 11 points, down 3% that day. And the stock is so strong, that's the best you can get. I really was hoping you could undercut those lows. But now I've had the shakeout, and then you've got another wave, and then a shakeout, another wave. So I really think you're going to get another shakeout. I'm hoping that it's a really good shakeout because I'm not that positioned anymore in big cap tech. But I don't know. I can't. It's what I want for, you know. So I have to be careful on, you know, what I want versus what I think is going to happen. I sort of think that's going to happen. I think the going has been a little too good. You've got, you know, the coins, the Carvanas of the world, just roaring, and it usually happens at the end of the move, not too not right on the button, but I feel like we're getting close. I think this is feels a little, I don't like that word frothy, but it just feels like it's just a little, the going has been too good. And so I think, like, to me, Meta is a sell. I don't think it's a short unless you're really aggressive and like to do stuff like that, but I think it's a sell. NVIDIA, I don't know, I'm torn because I think it's the best stock in the market, but normally I would say that's a sell. You're going to get some type of pullback to the moving average. Is it worth it to try to save 20, 30 points? You have to decide. A lot of it would depend on your position size. If you're really positioned heavily, I think it might be worth it to try to take some off here and save 20, 30, 40 points, something like that, possibly. And if you're wrong, it keeps going up. That's how I have done it. I've got a very minor probing type position, and then sort of, as strange as it sounds, hoping it goes down. So that's that. That's what the markets, you know, it's been a good market. I don't know. I know it'll end when it ends, and trying to predict it is not worth much. Usually when I try to predict how it's going to end, I get myself in trouble. So I'll try not to predict when it's going to end, but I think as we sit here right now, and then I've got this rebalancing thing. So I don't know if that's playing havoc with the big cap tech stocks as well. But I think if Meta and NVIDIA are short-term extended, and SMCI, you know, finally hit that kind of round number at 300, it's you know, 155% above the 200-day, 41% above the 50. You know, and throughout history, I've seen worse. I've seen, you know, the bubble in 2000, stocks much higher than that, above the moving averages. So these aren't perfect indicators, but it just gives you an idea that it's been good, as most of you know. And be prepared. Batten down the hatches a little bit. Say to yourself, well, if SMCI comes back to 270, can I handle it? If NVIDIA comes back to 439, can I handle that? What if it came back to 400 right on the 50-day? Could I handle that? You know, if you think it's going to 5, 6, 7, 800, you might want to risk that to make that. A lot of people I know do that. I'm not very good at that. Unfortunately, I've gotten better. I'm trying, but that's Marty Schwartz. I don't think I've ever quoted Marty Schwartz, but he had a saying in his book, Pitbull. I like to ring the cash register, is what he said. He goes, it's one of my weaknesses as a trader, is I like to ring the cash register. And when I read that, I said, that's me, spot on. So I try to ring it with less size so that I don't, you know, get completely out of the trade. But I definitely like to ring the cash register when things are going good. Let's look at the industry groups. Sorry, my Bluetooth speaker turned on. I think my daughter's using it. Before I go on, I do want to say that it's really kind of a really broad, when I say market, it's very broad. Like there's lots of stuff going on in the market. Japan has been in a bull market, emerging markets, although they haven't done anything forever. So here's the 2007 top, the crisis, building this cup with handle for the first time in forever. And look at what it did here last time. It went from 41 to 58 roughly. So that's a big move for an index, 41%. So this is interesting to me. I do own a little bit of this. But so there's other, and then Russell is not doing that great. It's okay. It's not doing that great. But then there's like bank stocks are just struggling. State Street's having a bad day today. I think JP Morgan announced today, looks a little short-term tired. Goldman Sachs, look, just going nowhere, relative strength of 45. So there's lots of places to be invested, and there's lots of places to avoid. And it's very bifurcated, diversified. I've got tech stocks, I've got metal stocks, I've got oil and gas field service stocks. I've got electrical, infrastructure type stocks. You could own, I don't own Tesla, but Tesla's acting great. There's an auto manufacturer. There's just so much out there. It's you can have kind of home builders have been really, really good. GRBK is one that has been on my radar. TriPoint. Look at that. Look, that's supposed to go down. Gap's down 50-day. That's supposed to go down. Look how fast it comes up. So there's lots of places to be invested, which is good. And the industry groups reflect that. Hardware peripheral, that's SMCI. Computer software database, that's like MDB is probably the leader there, maybe something else. Semis, we know how strong they've been. Internet, auto, computer software enterprise, computer software education, computer software desktop, building residential. There's the builders right there, the home builders. So it's the industry groups, and they have for the last at least probably, if I recall, like 3, 4, 5 weeks. It's been a great tell because they have the makeup of the top 40 industry groups roughly has been right in our wheelhouse as CanSlim investors, growthy type names, and so it was a good tell that the market was healthy and stronger than a lot of people thought. I know there's a lot you don't hear the talk anymore about how narrow the market was, right? Remember all the talk about how narrow it was. You don't hear that much anymore. So it's been pretty good. Stocks. So let's look at like Nvidia. Look, it depends on what type of trader you are, but it's just getting a little bit ahead of its skis, I think. Meta, this isn't a perfect trend line, but that's a bit ahead of its skis too. And I love the stock market. It's so fascinating to me, the behavioral aspects of it and the way the economy and everything works, and it's just great. Yeah, it's funny to me how they hate Facebook or Meta. I can never get over this name change. They hate it at 100, but they love it at 300. And it's the only place that I can think of where that's truly the case, where the higher something goes, the more demand is created. And the lower it goes, the more supply and less demand is created. So if I go to the grocery store and avocados are $10, I'm not more interested. If they're $1, I'm not less interested. Imagine they didn't spoil. I would buy a zillion of them if they were $1. Or go to your local car dealership, or if you're buying a home, right? Are you less interested in that same home as it goes lower and lower? Or a car. Do you love a Tesla at 40,000 and hate it at 20,000? But in the stock market, it's that's the case. And to be honest with you, it's really sort of the correct mindset, because this was 380 and now it's 230, and honestly, you should hate it there, because it's then it's 220, and then you should hate it there because then it's 160, and you should hate it there because then it's 120. But eventually they reach an equilibrium, and that changes. So eventually Meta reached an equilibrium, and that kind of changed here, obviously. And it looks to me like you're probably nearing the opposite side of the equilibrium, at least for the short term. So it just depends on how you want to handle it. But if you bought this flat base in Meta, congratulations, you did better trader than me. I would be peeling some off in the least, if not more. So SMCI, if there's anything such as a high tide flag, I felt like this was the textbook high tide flag, the best high tide flag I'd seen in years and years. And so far it's worked. Now, from the high tide flag pivot, which we don't have in Market Smith, we had a hard time programming it in, which is why we don't have it. It didn't look very good, and it had a hard time identifying them, and there were so few of them that it felt like it wasn't worth the effort to try to jam it in there if we didn't like the way it looks. But you're looking at, from that high tide pivot, you're up about 11%. But once it corrected 20%, I felt like, okay, there's the flag, and you could be a buyer somewhere in here on the way up. This is a tough stock, though. It jumps around a lot, but it's been a very, very good one. And then from Microsoft. So not as extended as some of the others. Apple, not as extended as some of the others, but it just feels like, I think as you sit here, you're looking at some type of short-term pullback in the market. When I say the market, I mean the stuff that's worked really well. There are some signs of frothiness. You've got like Coin and Carvana up a lot, and that's fine. If you traded those, great. There's nothing wrong with that, but they've made big moves, and so when I see that, my spidey senses tingle a little bit that maybe things are have been too good for this wave, and then I'm looking for the next wave. Tidewater. Now this is the hard part. This will be the hard part, because if I think the Meta and Facebook and SMCIs of the world and Apple are going to go down, what will the Tidewaters and the Schlumbergers and what else do I own in this area? FCX. Oops. What are they going to do? I don't know. I don't know. That's the hardest part, right? Because they kind of trade on their own merits, or outside the realm of those industry groups. So those, I do have positions in these, and I'm trying to hold on to them. NVO, I really like the story here. I think this drug, I'm not an expert on drugs, but I've had plenty of friends and people tell me how well the drug that Ozempic, I'm going to mess up the name, but you know which one I'm talking about, the diabetes drug that they're using for weight loss and appetite suppressant, has worked really well for a number of people. And I have a sheet somewhere where it's like of all Bill's really, really big winners. And that sheet is littered with retail and drug stocks, so Amgen, et cetera, because the TAM, the total addressable market of what Novo, and there are other people that have these types of drugs. So the total addressable market, unfortunately, is very large throughout America, especially in the world. And so you can really pile on earnings and sales. It's a big company. It's been around for a long time. Here's the monthly chart. It's what a great story. Does that make a case for long-term investing sometimes? Wow, geez. So I don't expect to make a double or a triple on it. But I do own it. I bought it yesterday. I liked, this is what I like. I like the shakeout below there, and then it comes back. So I bought it yesterday. I might buy more today. We'll see. But I like this story. So this is on my radar. And Lilly, it got hit on something unrelated to that same drug, I think. But look, it's right on the 50-day and it's trying to bounce. So I've been I think and then here we go with the fundamentals, but you've got accelerating earnings and sales with NVO. So that's kind of probably why I've kind of gravitated to that one versus Lilly. And in all honesty, excuse me, if Lilly has done better, at least in the short period of time that I've been watching these. Crocs is interesting to me. And now if they have earnings in 6 days, I don't know. I don't know what to think about this. It did gap down on earnings last time, which probably is better that it did that. Like if it gapped up 2 or 3 times in a row, I'd be a little worried that it was kind of expectations were getting a little too high. But I saw somewhere, I think it might have been on Twitter, that the most searched term on Amazon was adult Crocs. I've never owned a pair of Crocs. I don't think I ever will, but people love them. And so it's in that area where, shoes, like Bill would say, everybody has to own shoes. So On, it's another good one. I do own a pair of On shoes, not the running shoes, more of the casual one. They're comfortable. I like them. So this is an area of interest to me. And again, it's outside that realm. It's like oil and gas and metals and semiconductor stocks and shoe companies. And, I think Boot broke out the other day, Boot Barn. Yeah. So another area that's different. I think that's it for stocks. Let's jump to the quote of the week. This gentleman was on a podcast. I think the podcast is My Worst Investment Ever. So he interviews investors, business people, and asks them, what a lot of people like to hear the winning stories, but these are people that have, their worst investment, they're losers, because we all have them for sure. But he said something that it jumped out at me. I thought was very interesting. I can't remember exactly what he does. He buys businesses. He's more in like private. I don't want to say private equity, but private business versus it's not a stock trade or anything like that. But he says, I'm looking for companies. He says it should be growing. We don't like to buy declining businesses. I don't fancy turning around things. I'd rather buy a rocket ship and strap myself to it. I love that quote. That's exactly how I feel about stocks. I'd rather buy SMCI, NVIDIA, Tesla, although for whatever reason, I can't wrap my head around Tesla. VRT hasn't been much of a rocket ship, but it's done really well. But the idea is you want to buy stocks that are going up rather than try to figure out when they're going to stop going down. I just saw another tweet today that AT&T hit I think it was a 20-year low. So AT&T, when I first got in the business, this was what they would call a widows and orphans stock. This is something that you would put, your grandmother in because of the, I can't find the tweet. You put your grandmother in for the dividend. You didn't have to worry about it going up and down. Yeah, it did. AT&T trading at a 20-year low. So, that's not a rocket ship. That's something that probably will never turn around. So you want to buy stocks that are moving up, that have big earnings and sales, ideally, that have relative strength, that are showing that they can resist the market, which is why when the market goes down, that's the best time to do your hunting. So you really, one of the things about NVIDIA, it just stuck out like a sore thumb to me because it would never go down when the market was going down. It never seemed to get hit. And it was like I was waiting for a base and waiting for it to pull back to the moving average, and it just wouldn't do that, right? It was a rocket ship. It just couldn't go down. So strap yourself in. And, the stop loss is designed to protect you. So if you're wrong, if anything you buy, if you're wrong, you know, hey, I'm going to lose X amount. If I'm position sizing my account correctly, I'm going to lose Y amount on my whole account. So good exercise is, and a good number probably is 1%. Think about your whole account. Let's say you have $100,000. You probably don't want to risk more than 1% on any one idea, 1% of your whole account. So that would be $1,000. So if I'm going to buy XYZ and I put $20,000 into it, I don't want to lose more than $1,000. That's what, 5%. So it helps you to size correctly. And 1% is overcomable, if that's a word. If I lose 1%, I lose 1%, I lose 1%, I get the next one right, I make 4 or 5%. You can overcome. When I say 4 or 5%, I mean on the whole account. If you have a 10% position, stock goes up 40%, you make 4% on the whole account. So you should have that kind of math either written down or at least mentally for sure on kind of your risk reward standards. But I'm gonna print this and tape this to my wall. I'd rather buy a rocket ship and strap myself to it. There was a guy, last thought on this, his name was Ian. I apologize, I'm a mess. I don't remember his last name. I went to one of his webinars. He was around or seminars. He was around when Bill was doing seminars, and I think his software was HGSI, and the software still might exist. But I went to one of his. I went to a ton of the William O'Neill ones, but I thought I'd go to one of his, and he used to say, "Buy rockets, not rocks. Buy rockets, not rocks." Same concept, right? Okay. Oops. Hopefully you didn't see that quote, because that's a quote I've been saving to use. Somebody might pause and see it, but I'll use that one another time. When I get quotes, since I build them and I put them below the contact information, and then I try to cherry pick based on the environment, based on what the market is doing. I look for quotes ideally that are relevant to what's happening in the market. MarkSmithInvestors.com, 800-424-9033. Thank you guys. Have a great weekend. Bye-bye.